Today, we're taking that stack of sources you sent over articles, research, notes, and we're really going deep into the currents shaping our world right now. Our mission, really, is to pull out the most crucial insights. We're looking at global power dynamics, the monetary system, which is clearly evolving, and, most importantly, what these big shifts mean for your financial future.
Yeah.
How do we make sense of it all? How do we position ourselves in this landscape that's changing so fast?
It's a key question.
Yeah. Get ready, because we're going to connect some dots today, maybe some surprising ones, between things like corporate buyouts, government policy, and, well, the ground beneath your own economic feet.
And what really jumps out from these sources, I think, is this pattern. It's power centralizing, yes, in governments, but also increasingly in private hands. It's a significant shift, often happening behind the scenes. And it really redefines how we might need to think about national sovereignty, economic influence, all of it.
That's a great point. And to really illustrate that, I mean, the sources have this story. It almost sounds like something out of a thriller, doesn't it?
It really does.
So picture this. BlackRock CEO, Larry Fink, reportedly calls President Trump directly. He's pitching a huge deal.
Right. The Panama Canal ports.
Exactly.
Yeah.
The idea, at least the stated one, was to get control of these vital waterways out of the hands of a Hong Kong billionaire's company and into, quote, American hands.
Supposedly to reduce geopolitical friction.
Supposedly. But the scale.
Well, yeah, that's the thing. It wasn't just Panama. The initial talk was maybe $19 billion, but BlackRock was actually aiming bigger, much bigger.
43 ports globally.
43 ports from the same Hong Kong billionaire. We're talking
Right.
Europe, Asia, other key spots. It makes you wonder about the sheer ambition, the scale of it all.
Well, and if you connect those dots, if one entity like a BlackRock owns this huge network of global ports, I mean, theoretically, they...
And maybe even dictate costs. The sources even point out BlackRock's own statement, something like, "We are increasingly the first call for both companies and governments."
Wow. The first call.
Yeah. So it raises a pretty big question, doesn't it? How much influence could a private company like that actually wield over governments globally? And by extension, over your own financial situation?
That question about influence, it immediately leads to another one, right? What kind of financial system even allows that kind of power to concentrate?
Exactly.
And the sources really dig into this. They suggest the whole foundation or monetary system might have had this huge shift years ago. They pinpoint 2008.
The idea that the old system died then.
Right. And that echoes things we see today, like headlines saying the U.S. dollar is poised for first 100 days of presidency since Nixon.
That's a powerful parallel.
It is. It takes you right back to 1971, Nixon taking the U.S. off the gold standard. That fundamentally reset everything, didn't it? From gold-backed money to, well, debt-backed fiat money.
Right. And let's clarify fiat money based on these sources. Its currency, a government says, is legal, but it has no intrinsic value. It's not backed by gold or silver.
Its value just comes from the government saying so and, well, people trusting it.
Precisely. And when that trust goes.
So does the purchasing power. We saw that stark example in the sources about Zimbabwe. Overnight revaluation.
Yeah, where financial assets, nominally they soared, but then effectively reset to zero. They even mentioned the Zig gold currency having a 44% overnight reset just last October.
Wow, 44% overnight.
It brings us right to the debt levels mentioned in the material, just staggering numbers. $36.2 trillion held by the U.S. public, another $8.5 trillion held by foreign investors.
Who the sources say are now leaving. That's critical.
It is. Japan and China, historically the biggest buyers of U.S. treasuries, they started backing away way back in 2013, reversing that trend.
So what does that mean for how money is created?
Well, deficit spending, fundamentally, it's creating money from debt that's just never really repaid. The system is built on expansion. It can't really handle repayment because that would, as the sources put it, suck dollars out of the system.
Okay, so how did this work for so long?
Well, the sources point to how central banks managed it for, 42 years, primarily through lower interest rates.
Right, hiding the debt buildup. You could borrow more for the same payment.
Exactly. But then inflation surged recently, and the Fed had to raise rates. That broke the pattern.
The 42-year trend just snapped.
And that exposes the flaws, doesn't it?
Yeah.
Suddenly, U.S. Treasuries, the safest investment, they become more and more volatile.
The sources really showed that shift, didn't they?
Yeah.
From bedrock safe haven pre-2008 to, well, risky.
Definitely. Increasingly unpredictable after 2008 and pushing investors away. This creates what the sources are calling a doom loop.
A doom loop. Explain that.
Well, as governments and big foreign buyers step back from treasuries, there's less support. It weakens the whole market. It could lead to, the sources use the term cardiac arrest in the treasury market.
Cardiac arrest, that's dramatic.
It reflects the potential severity. The world seems to be turning away from the US dollar standard. It exposes what the sources, quite provocatively, call a con game.
A con game reliant on
New money, basically, only available from the Fed's printing presses. And it highlights the perception management needed to make US bonds seem risk-free when maybe they're not.
Okay, so these are huge high-level shifts. Global finance, the economy's foundations.
Yeah.
But let's bring it down to earth. How does this actually hit your pocket?
Right, the tangible impact.
There was one positive note first, Florida legalizing gold and silver as legal tender.
That's interesting.
It is a move toward sound money principles at the state level.
But then the tariffs. The sources give this really detailed example. Megan Johnson's bridal company, manufacturing in China.
Yeah, that was quite illustrative. She's facing suspended shipping from major carriers like DHL because of tariffs. She has to ship tiny parcels or use methods with basically fake tracking numbers, like all eights.
No real tracking, wow.
And on top of that, the China payment system shut down for Americans, canceling orders, forcing reorders. It sounds like a nightmare.
And the sources stress it's not just bridal or auto parts, it's across the board.
Yeah, we saw that shoe company email too, with a graph trying to explain price hikes from tariffs, like a 90% tariff on goods from Vietnam.
And they mentioned currency manipulation, which, let's be honest, the sources say every single country manipulates to some extent.
So what are tariffs really, when you boil it down?
Well, here's where it gets really interesting, I think. Fundamentally, tariffs are just taxes. The sources call it a form of confiscation.
Confiscation, strong word.
It reflects the nature of it, and apparently there's political pushback against companies like Amazon trying to list the tariff tax separately on receipts. It's seen as an act of political war.
Why? Because it makes the tax visible.
Exactly. The current setup often leads people to blame the company for raising prices.
Right. Instead of looking at the underlying causes.
Like the Federal Reserve, central banks, government spending, the things that actually devalue the currency in the first place. It's a crucial distinction if you want to understand where your money's value is truly going.
Okay, so we've got these huge corporate plays, a potentially shaky monetary system, tariffs hitting everyday businesses. What do the sources suggest you, the listener, should actually do about it?
This is where the pivot happens.
Yeah, they really focus on sound money as a core strategy here, and they contrast it pretty sharply with fiat currency, obviously, but even with things like Bitcoin.
Bitcoin is described as, what, a brand new product from 2009?
Right, an image of gold, not really storing energy in the same way, and maybe needing an engineer to fully grasp it.
Whereas gold.
Gold's got the track record, doesn't it? 5,000 plus years as money, according to the sources. It exists above all central banks, above all governments.
Implying it demands fiscal responsibility from those who use it?
And critically, it's in your control. You hold it, you own it, it's private.
That's a key element.
It fulfills all four functions of money the sources lay out. Tool of measure, tool of barter, short-term store of value.
And the crucial one, long-term store of value.
Yeah.
Which fiat money, by design, lacks.
Exactly.
Yeah.
Unlike that trillion Zimbabwe dollar bill that buys nothing, gold holds its purchasing power. Physical gold, physical silver, they have intrinsic value. Fiat doesn't.
And what's fascinating, really compelling, is seeing the global central banks themselves acting on this. They're buying gold at record levels.
Yeah, the sources ask that great question.
Yeah.
Who knows more about what's happening to the currency than they do? Nobody.
Exactly. And look at the real-time example from Turkey in the sources. It's incredibly telling.
Walk us through that.
Okay, so official inflation up 569% in 5 years. That's huge.
Unbelievable.
So back in 2020, people were literally selling their homes, selling their cars just to buy gold, to shield themselves.
The desperate measure, but rational given the circumstances.
Absolutely. Now, the US dollar gained a lot against the Turkish lira, sure, but even that wasn't enough to keep up with 569% inflation. It highlights the point. Protecting a devaluing fiat with another devaluing fiat doesn't work.
So holding dollars wasn't the answer either. What about Turkish stocks?
Nominally, they were up maybe 812%, but in real terms, not great because you could only cash out into, well, rapidly devaluing lira.
Right, so where did gold fit in?
Critically, even the manipulated spot gold contract, it still massively outperformed both the dollar and Turkish stocks, up almost 950%.
Wow. That really underscores the point.
It does. Physical gold offers, as the sources say, freedom from governments, from banks, from counterparty risk.
Explain counterparty risk quickly.
It's just the risk that the other side in a deal won't hold up their end. With physical gold in your hand, there is no other party. You bypass that risk entirely.
Got it.
The Turkish government even tried to get people to deposit their gold in banks, but trust was gone.
Understandable.
So gold hoarding just grew. People understand gold and silver are, above all central banks and all governments. Even the Bank for International Settlements, the BIS, calls gold the only asset with no counterparty or geopolitical risk.
That's a powerful statement from the central bank's bank.
It is, and we even see patterns like the Turkish real estate bubble up, pop, then this cup formation the sources describe before it starts climbing again. A sound money strategy helps you navigate that, preserving purchasing power to re-enter assets later.
Okay, let's unpack one more practical thing. Gold versus silver. People often ask about this. What do the sources say about the differences?
Yeah, they definitely have different functions, largely because silver gets used up.
In industry, right?
Exactly, which makes it more of a secondary currency metal. When you look at performance during different economic stresses, inflation, deflation, hyperinflation, the sources show gold consistently outperforms silver.
So practically, how might you use them differently?
Well, gold is maybe better suited for preserving larger amounts of wealth. Think paying property taxes, perhaps using foreign gold coins, as mentioned. Silver is potentially better for smaller day-to-day things.
Like buying gas or groceries, as the source suggested with strawberries.
Right. It comes down to the historical functions. Other things tried as money rye, shells, giant rocks they failed. Shelf life issues, portability, divisibility.
Diamonds lose value if you break them down.
Exactly. But gold and silver are monetary at their base. They hold value even if you melt them down or break them into tiny pieces. And gold, uniquely, meets all four sound money criteria laid out. Silver doesn't quite hit all four in the same way, mostly due to that long-term store of value comparison.
So gold is primary, silver secondary, but both have roles.
That seems to be the takeaway. And if we connect this back to the bigger picture, this idea that the system died in 2008, it logically leads to focusing on broader preparedness.
Not just financial assets.
No. Food, water, energy security, barterability, and yes, wealth preservation. But the sources also really stress community now.
Why community specifically?
For security. Especially, they note, for people who don't have the time luxury of getting an early warning about potential disruptions, building security means looking at all those necessities: food, water, energy, shelter, barter skills, preserving wealth, and, critically, those strong community ties.
It makes sense, and it ties into that idea from the sources about being 20 years too early rather than 1 second too late.
Exactly. It's about proactive steps.
And it's not just individual, is it? The sources talk about a potential sound money movement.
The idea that if enough people, they throw out a number, maybe 3% globally, convert their, quote, dying fiat into physical gold and silver.
They could actually influence the next system.
That's the suggestion.
Yeah.
They could have a seat at the table, maybe even vote for a system backed by redeemable gold. It emphasizes collective action.
One person can't do it alone, but together we could do everything. That was a line from the sources.
A powerful sentiment.
So, wrapping this deep dive up, what does it all mean? It seems clear the financial system is resetting, maybe in quite profound ways.
Yeah, the shifts are significant.
And while that creates challenges, big ones, it also maybe presents opportunities for people who understand what's happening.
Understanding is key.
It means seeing the potential dangers in current policies, recognizing how they hit your daily life, and then empowering yourself. Strategies like physical gold and silver, community building. These seem to be the core takeaways.
Absolutely. Which really brings us to a final important question for you, the listener, to consider. Given these profound shifts we've explored today, and the potential paths forward highlighted in the sources, what role will you choose to play in shaping your own financial future, and maybe even influencing whatever comes next for the global monetary system?